Good morning, everyone. It's March 1st. Can you believe that? 2021. I'm Dawn Litchfield Brown. This is my partner, Dennis Nelson. Looking good. Got a nice tan, I see.
I did. Was out this weekend. What a beautiful weekend.
You're making me look pale. My husband says I'm underbelly fish white.
That's
pretty white, right?
That's pretty white, yeah.
We have a couple of housekeeping things we're going to talk about today, which will be helpful maybe to everyone out there, but certainly to our clients that are listening. And that is, we have some new office hours. They're from 9 to 4:30. And we have done that to allow our staff some time to cope with a lot of the things that COVID has created. So hopefully you'll all respect that, and you'll also understand when you get the message machine after 4:30 that no one is here. One of the other things that I thought we should talk about, because people tend to call a lot, is the Fidelity 1099s. Those come when they come. If you don't have them, we probably don't have them. So if after you don't have them by like April 10th or something, probably you should give us a call, and then we will call Fidelity and find out what's going on. But other than that, they just come in the mail when they do. Remember, sometimes they're revised and they'll send out another one. Most of the time, the revision doesn't mean much. It's maybe $1 or $2, right?
They're usually pretty small, but it is a revision, and you can be too fast getting your stuff to your CPA. Because in a lot of cases they may feel that they have to redo.
Well, actually, I always extend, because I don't want my CPA rushing through my tax return with how many others to get it in by April 15th. Extension isn't a bad thing. Just remember, if you do extend, you'll still have to pay the estimated tax they think you might owe, but it gives you a little breather time to make sure your returns are really done right. So I don't have a problem with extending, although I know a lot of people think that it alerts the IRS that something's wrong, but it really doesn't do that at all.
So they haven't dragged you off to jail yet?
Not yet anyway, but
okay.
You promised to visit me, right?
Yes.
Some days I wonder. The other thing I wanted to talk about is IRA contributions or SEP contributions, but especially IRA contributions. If you need to make one, you need to get it in before the 15th. That means you need to get it to us at least 5 days before, so we can make sure it hits your account before the 15th of April. So please be really careful, and if you need to do that, let's get on it and get them done, right?
Right.
Okay. SEP IRA contributions, you may remember, if you're making a contribution to your SEP, you usually have up until the day you file your extension. So if you extend to sometime in June, you have that. If you extend to the October, which is the latest extension, you have all that time to get your contribution in before for 2020. Now, setting up plans is different. You usually have to get those set up, your SEPs or your profit sharing plans, before the end of the year. So if you haven't set one up, that might not be so good. But please check with your CPA, make sure that everything I've told you is correct, which I've been wrong on occasion, but not very often, right?
Hardly ever. I can't remember.
Oh, yeah. See why he's my partner, guys? And then two more things. We are coming up with a new format for our reports. Everyone knows they got mailed reports pretty much this year. It was just seemed like the right thing to do. Returns were great. We were so happy. We are making some changes with some of our annuities that really underperformed the Jackson annuities. So if you're an annuity owner out there, take a look at your annuities, see how they did perform last year, because we were kind of shocked when we really looked at the performance since inception for some of the other companies that we see out there. So we've done that. But in addition to the mailing of the reports, we will be having a new report in your hands with a new system for the first quarter. Those of you who get quarterly reports. Hopefully we'll be meeting with you so we can go over them in person, so there won't be any questions on that. Keep your fingers crossed, we'll be meeting in person in April.
Yeah, visually it's a nicer report to look at. Like anything, takes a little getting used to.
Yeah, you need to know where to put your eyes.
Yep, yes.
Because we know right now where they go, right? So you have to train your eyes, retrain your eyes. And then finally, some tax strategies you might want to be thinking about for 2021. All of us are anticipating higher taxes. Whether they happen or not is up to our government. But some of the things many people are doing that feel they're going to be in a higher tax bracket down the road is they are rolling their IRAs to their Roths while they still can. It's a calculation you might want to do, but if you have a few years, 10, 15 years, it's probably going to work out it'll be better. And if the market has a little drop, that's the time to do it. When the market drops, you
Right.
roll that in, so you'll pay less tax.
Right.
So that's one thing. Charitable remainder trusts have gotten very popular again. For many people have a lot of stock with a lot of low cost and high values. So charitable trusts have worked in conjunction with the Roths, so they can kind of offset the tax. Just something to get your minds working. And of course, donations are great this year too, because you need, and make them sizable so you can at least itemize and write them off. But it's a great year to make donations if you feel, again, if you're worried about the higher possible capital gains rate. Those were all the housekeeping things I had. So many things about taxes, and I haven't been on for a couple of weeks. So what do you want to talk about?
Talk about the market.
Oh, he always wants to talk about the
I love
market.
talking about the market. What else is there?
I don't know, all this stuff.
Well, last week we saw the Dow drop about 1,000 points.
Mm-hmm.
Wouldn't you know, today we have gotten back about half of that
Yeah, we were up
already
over
today.
600 when we came up.
Yeah, but the market got a little spooked and generated some conversation about bubbles. 1999, if you remember back in 1999.
Yes, I do.
And I do. We were there, but a lot of difference between 99 and what's going on today. First of all, just the average price earnings ratio in 99 was over 30. Right now it's 21 for the forward earnings.
So that means, what is the price of the stock as compared to how much that stock is earning? So you say if it's earning $1 a share and now it's 20 times that, you said it's 20 times, right?
Mm-hmm.
So the stock would be earning 20 times more, priced at 20 times more than what
Right.
it's earning.
Yeah.
Hope to get that.
That's right. Good explanation. So that's about 50% more that stocks were priced in 1999 than they are now, which isn't to say there's some bubble areas.
For sure.
For sure. We're looking at, I don't know, we talked about Bitcoin last week. Maybe that hit a little bubble, down from almost 60,000 to 45,000.
Oh no, what will we do?
Yeah, we won't have anything to spend. The electric vehicle hit kind of a bubble, and there were some other areas that were definitely bubblish, but not anything like 1999. They talk about interest rates going up. I don't know. I have a tough time seeing why that is something that's going to impact the market. Interest rates going up. And to give you an example, the 10-year Treasury bond went from about 0.6% to about 1.5%. So that's over doubled in the last couple of
But
weeks.
if they go up too high, the government's going to have trouble making their own payments.
Yeah, the government, the Fed does not want to see high interest rates here,
Right.
believe
Which
me.
I guess works for most of us, unless you're worried about inflation.
But what that really tells you is that demand for treasuries has collapsed. So interest rates are higher because the prices of the bonds are lower, not because there's huge interest in buying bonds.
I got it.
So so there's lots of dynamics going on. But you go back to 1999, where the interest rates were 6%. So they were almost 6 times higher than they are now. And of course, interest rates are a competitor to the market.
I think probably the 1999, one of the bigger difference, or the similar things is, in 1999, and you hear this all the time, people were having a drink and they on the back of a cocktail napkin, they were writing up this new company, and next thing you knew it was public and people were buying it and never made a dime, right? Which, by the way, is what kind of Amazon did at first. But anyway, so that there's a few of those types of companies out there right now which are mirroring that same scenario. And I think that's what two things scare people, that, and I think the other thing is there's this whole new genre out there, how the market is traded. And I think that
Right.
people are very worried about, what appears to be market manipulation that probably wasn't as apparent, may have been there, but not as apparent as in 1999. Right now, we're seeing it everywhere.
But there's so much talk about the GameStop phenomena, where speculators drove up this stock from below 10 actually to something like 500. Wow! And it's a pure speculation. The stock isn't worth anywhere near that. All the people invested in that stock were out long ago, and all the speculators had taken over. And that type of thing happens particularly when there's new money coming in and inexperience.
But it's a tiny portion of the market, and I mean tiny. I forget how many 1,000ths or whatever of a percent it is, but it's a tiny part of the market. I think it's just that underlying feeling that something's not right in general that gets people a little spooked, and of course it's in the news constantly. So you think it's much larger than it really is. And what we are always here to do is help lower expectations and increase security. That's what we always try to do with our portfolios. Is we're not going to ever be in those hot stocks, at least unless you have a play account.
That's right. And the flip side of that, exactly what you're saying. The flip side of the hot stocks are the goods, what we call value stocks. These stocks pay dividends, they earn money, they've got a business model that works. And those type of stocks have gone up quite a bit here in the last couple of months.
Right. One last thing I want to mention, and then you might have a closing comment, is we've been working on a few estates recently, and this is kind of amazing, and I want everyone to make sure to look in their safety deposit boxes. We had some certificates come in that were actually from Minnesota Mining, and the individual had died, and they were placed in his name with his father as custodian back 60 years ago. I think they may have some value. There were only 5 shares, but 5 shares of Minnesota Mining dividend reinvest over 60 years. Please go through and check your safety deposit boxes. And if you have anything in there like that, let's get them out and get them cleared up before anything happens to you.
That truly was amazing. You may not see that very often, but it happens.
Yeah.
And there's stories all the time about people when they're going through, after somebody dies, going through their papers and finding stuff just like what you're talking about. You know, there could have been how many splits of 3M during that period of time?
I can't wait to find out. We'll have to tell everyone how much it really came to. There was also 2 worthless stock certificates in there, just so you know, kind of balances out. But anyway, do you have any closing comments?
No, I stick with the market.
Okay,
just do what makes sense.
And my closing comment is just breathe. It'll be okay. See you next week.